Bill Ackman recently bought a stake in Netflix that's worth $1.4 billion. Now, is Warren Buffett next? I think you could make the case that Netflix fits all of the investing criteria Buffett likes to see in the companies he owns. And as you might know, Buffett is sitting on a massive cash war chest of almost $150 billion right now. So did Buffett exploit Netflix's recent 50% stock sell-off just like Bill Ackman? This is what we will discuss in this video, and so without further ado, let's jump right into it. Alright, hello fellow intelligent investors, my name is René Salman, and before we get started, please let me know in the comments down below whether you could see Buffett buying Netflix, and why or why not. Are there maybe any other businesses you could see Buffett buying right now that many stocks trade 20, 30 or sometimes 40, 50% below previous all-time highs? Amazon comes to my mind, for example. So please make sure to leave your ideas in the comments down below, and I will get to the actual video. Okay, so just 2 months ago, Netflix was trading for around $700 per share. But then within a matter of 2 months, basically, the stock declined sharply, experienced one of its worst intraday price declines of more than 20% and was at its bottom trading for $360 per share. So almost half the price of around 2 months ago. And as I've discussed in my previous video, some superstar investors like Bill Ackman have apparently exploited this, hopefully temporary share price decline to build a position in the streaming giant's stock. Ackman, he bought 3.1 million shares within just 4 trading days. And those shares are now, after the rebound of the stock, worth a cool $1.4 billion. So apparently Ackman believes that the investment case for Netflix has not materially changed, and that despite the short-term weaknesses, the weak subscriber growth guidance, the business will do fine if you are willing to take a longer-term view of, say, 5 to 10 years. So what does all of this have to do with Warren Buffett? Well, I think Ackman's big bet bears the question whether other well-known superstar investors, the Guy Spears, Manish Paprice and Warren Buffetts of the world, have maybe also used the share price decline to build a position in Netflix. Unfortunately, we will not get to know whether any of the aforementioned superstar investors invested in Netflix before May this year, when they have to file their 13Fs that reveal what they have done in the first quarter of 2022. That's a long waiting time, and that's why I want to lay out 5 reasons why I think Warren Buffett himself, the investing legend from Omaha, might very well have invested in Netflix in early 2022, which would certainly shock the investment community. I'm not saying this will happen, but I wouldn't be particularly surprised either. Bill Ackman basically laid out all of the reasons for owning Netflix in his letter to shareholders. And clearly Buffett and Ackman follow a very similar investing philosophy. So, first of all, I think Buffett likes to invest in businesses that he understands. And I would argue that Netflix business is not particularly hard to understand. Let me just try to summarize their business model in maybe 5 to 6 bullet points. So, Netflix is basically the global leader in the subscription video on demand industry, or in short, SVOD. Netflix has 221 million paid subscribers in over 190 countries as of February 2022. The company offers TV series, documentaries, feature films, and mobile games across various genres and languages. And Netflix provides its paid members the ability to receive Netflix streaming content through a host of internet-connected devices such as TVs, digital video players, and of course mobile devices like smartphones or tablets. Netflix was founded in 1997 by Reed Hastings and Mark Randolph as a DVD rental business. The firm is headquartered in Los Gatos, California, and it employs around 11,000 people. In 2007, they actually transitioned from their DVD business towards licensing content from other companies. And eventually they started creating their own content in 2012, which now represents the majority of the content assets owned by Netflix. And maybe just as an aside, House of Cards was basically the first well-known Netflix original series. So would Buffett be able to understand this business model? Well, I'm 100% convinced that if he would put in the work, he would absolutely be able to understand Netflix business because it is not incredibly complex. And Buffett clearly understands the media and entertainment industry, and he has made big bets in this industry in the past. For example, Disney, a company that now offers its own streaming service with Disney Plus, and ABC Capital Cities come to my mind. Okay, next up, and maybe most importantly, Buffett is sitting on a massive cash pile, and over the last couple of years he was not able to deploy this cash at the rates of return he wants to generate for Berkshire shareholders. So the recent price drop in Netflix stock might have just been the opportunity that he has been waiting for years. If you want to get really crazy, you could actually point out that Berkshire's war chest would almost allow them to acquire Netflix outright if they maybe would issue some debt on top of the cash they are sitting on. And this would have advantages for both parties, I think. Berkshire could get rid of its cash, and Netflix and Reed Hastings, so the CEO specifically, could focus on the business without the quarterly earnings reports that create a lot of noise and short-term pressures. But then you might make the case that Netflix stock has actually rebounded fairly quickly, making it impossible for Buffett to build a sizable position at a price he would be comfortable paying. Okay, moving on to my next point. We all know that Buffett places a lot of emphasis on the presence of a moat that surrounds the company he owns and that protects the company against competitors. So could Buffett come to the conclusion that Netflix has a strong and sustainable competitive advantage? Well, I think he absolutely could. In fact, Buffett wants his managers to constantly try to expand the moat, the already existing moat, and I think Netflix has or shows various attributes that show that its moat is actually evolving and getting wider. So for instance, I think Netflix business certainly has scale advantages. This is a concept that I have discussed in my previous video, and I have shown that due to its scale, Netflix may see its profits soar in the coming years because its fixed costs should remain relatively stable, so the amount of money they spend on new content. And if the company can now continue to hike prices and increase its subscriber base, Netflix margin profile will absolutely change for the better and could lead to more consistent positive cash flow. Netflix certainly enjoys a first mover advantage in the SVOD space with a subscriber base that is almost twice the size of the Disney Plus platform and 4 times larger than Hulu and Apple TV, for example. And those scale advantages also help to finance Netflix content spend that is around 50% higher than that of any peer media company. And I think the wide range of selection that Netflix has to offer is certainly one of the key value propositions to Netflix customers. And as I said, Ackman and Buffett share a very similar investment philosophy. So it should come as no surprise that Ackman addressed this very concept, Netflix Economies of Scale, in his letter to shareholders. Here's what he wrote. Netflix has highly favorable characteristics, such as economies of scale and superb quality in its industry-leading content, which should continue to drive future growth and widen the company's powerful competitive moat. There's the opportunity of substantial margin expansion with the opportunity for continued improvement due to economies of scale and the company's rapidly growing global subscriber base. Moreover, a moat should give a company pricing power. And as Netflix has just very recently hiked prices in the US and Canada, and as the standard subscription plan is basically twice as expensive as the offers by competitors like Apple TV, Amazon Prime, and Disney Plus, you could make the case that Netflix does indeed have pricing power. And just on a side note here, if you want to learn more about Netflix pricing power, I would absolutely recommend the blog post titled Netflix Pricing Power by Ensemble Capital's Arif Karim. And in this blog post, he wrote, "We believe Netflix has it in spades and expect that they will continue regular price increases over time that will allow revenue to grow faster than subscribers. What's less talked about is the strong pricing power Netflix has shown over the past 5 years since announcing its first price increase in May 2014, growing pricing globally at a 5% clip, 7% in the US since. Okay, and maybe finally, a moat protects a business from competition, so there are high barriers to entry. Let me quote what the investors at Pollen Capital, again investors that share the Buffett philosophy, wrote about Netflix when they started their position in, I think, early 2021. While there is competition from the likes of Apple, Apple TV, Amazon, Prime Video, Disney, Disney Plus and Hulu, and others, we believe there can be a handful of winners in this industry. Already, we see many people subscribe to multiple streaming video services, with Netflix being their anchor service. That said, the barriers to entry are high, and we believe they are getting higher given the substantial amount of capital and size of the subscriber base required to maintain a competitive service for both viewers and content producers. Now, another important element of Buffett's investing philosophy is the presence of an honest and talented management team. And you can certainly make the case that Netflix is led by a visionary management team. As Ackman puts it, Netflix has a truly best-in-class management team and unique high-performance culture. I would argue that Netflix CEO Reed Hastings shows management traits that Buffett would love to see. As Netflix's most recent proxy statement shows, Hastings owns around 8 million shares, and those shares are worth a cool $3.5 billion. And so this should certainly incentivize Hastings to make long-term decisions benefiting shareholders. In addition, Hastings has actually bought more Netflix shares worth $20 million US after the very recent 30% stock price drop. And this should give investors confidence that he still believes in the long-term success of Netflix. Let me just give you 2 examples of the long-term focus of Netflix management team. First of all, there is a long-term view section on the website of Netflix. Not very many companies I know have their long-term vision so succinctly expressed on their homepage. Secondly, in Netflix's most recent earnings call, Hastings was actually pretty annoyed by one analyst that asked a question about a rather negligible quarterly miss. And on top of all of this, Hastings has remained humble throughout his entire career as Netflix CEO. For example, after receiving backlash because of the announcement to split the business into its digital streaming business, which should have retained the name Netflix, and its DVD mailing business, Hastings basically sent out a memo to investors in which he expressed humility and showed the ability to change his mind. And this is absolutely something that Buffett likes to see in managers. So the ability to admit mistakes. Okay, so far we have come to the conclusion that Buffett could understand Netflix business, that Netflix enjoys significant competitive advantages, and that it is run by an honest and competent, long-term focused CEO and management team. Now all of this leaves just one last pillar, and maybe the most important one. Is Netflix available at a fair price? Well, first of all, Buffett places a lot of emphasis on the predictability of his investments, because otherwise he cannot value them. And you could make the case that Netflix's future can be predicted with a reasonably high degree of certainty because of Netflix's recurring revenue streams. Recurring revenues are generally favorable, as recurring income streams offer a resilience and of course good future visibility. And again, as I said, this makes the valuation process at least a little easier. Now on top of this, Netflix probably enjoys a multi-decade tailwind that benefits from the shift from linear TV to on-demand streaming, which again brings us back to Buffett. He likes to invest in businesses where he is fairly certain that these businesses will be more valuable 10 years down the line. But the actual valuation of Netflix is the tricky part. In my last video, I've actually outlined why valuing Netflix is so difficult. So of course you might want to check out that past video. And I think there's a good chance that Netflix valuation may actually turn Buffett off. He might either conclude that Netflix is too expensive, or that valuing Netflix and determining how much management needs to spend on content in order to maintain its current subscriber base is simply too hard for him, and then Netflix would just end up on Buffett's famous too hard pile. So the idea of Buffett buying Netflix, all of this might just as well be my fantasy, and Buffett might determine that the quality is not as high as Ackman believes, and Buffett might not like the rather thin free cash flow margins that the business is currently producing. And generally there are of course a lot of bear arguments against an investment in Netflix as well that we have basically ignored in this video. So of course always do your own due diligence, and just for full disclosure here, as of the time I record this video, I have no position in Netflix myself. And that's it. So as always, may your finances and investments prosper. Good luck.